We found evidence that the stock market moves according to the Fibonacci sequence, and this can be explained by the Dunning-Kruger effect, because people are herd animals, and in the end we are all acting and making our decisions out of trust, fear, or out of confidence. And this is why we are buying or selling or expanding or reducing our positions on the stock market. The Dunning-Kruger effect is explaining that a large group of people is in the end acting all the same. The Dunning-Kruger effect can be explained with these charts. You start here as a human being, say with option trading, and then you start getting confidence and you reach the peak of Mount Stupid because you are actually not aware of that, you do not know what you are doing. And then you think, oh, all goes very well, my position is in large profit, but then the market goes down and your position is losing. And then you reach the valley of despair and you think, what am I doing and what do I need to do? And then when the stock price is going up again, you reach the slope of enlightenment and you think, oh, maybe it will reach profit again. And then in the end, you reach the plateau of sustainability and you think, yes, I did have the confidence to wait. If you know how this works every time again, you can act on this. One of the greatest examples is Heijmans. Here you see the stock chart of Heijmans, and here you see that the stock price was around 135 euros around 2007-2008. So all was going well with the company, people had a lot of trust in the company, and so the stock price was high. But then the 2008 bank crisis occurred, and then you see that people are all acting the same. When market goes bad, all people act the same and everyone starts selling off. But the selling, as you can see here, is not going in a straight line. It follows the Fibonacci principles. What you see here is first the retail sellers, the normal end consumers, let's say, are selling their stocks or their option positions because a lot of people don't know what they're doing. Then the day traders start selling, then the intraday traders start selling, then the long-term swing traders start selling. And then in the end, when important lines get broken, the large investment funds start selling and the pension funds start selling and then the hedge funds start selling, and then in the end the thesis is broken and from bullish the thesis has become bearish. When the price has dropped below the Fibonacci 0.786 line, we call this the gray zone. A price can remain there for a long time. It's not like in this Dunning-Kruger effect chart that the price goes up again. No, then the thesis is broken, people has lost their trust in the company, and for some reason the price is low and it can stay low for a long time. You also see this with PayPal at this moment. PayPal is also in lower regions and this can take many years. But then, for some reasons, a stock price can move upwards again. And this is because a company is growing. Maybe they did an acquisition of another company, or they won contracts from the government. In this case, Heijmans is a construction company and they won large contracts to renew roads in the Netherlands. And so the stock price moves up. And then when you break the 0.786 zone, bigger groups of people start becoming interested in the stock. And it comes in the news like, hey, Heijmans did some good acquisitions and the stock price is rising up again. And then the day traders starts to buy the stock again. And then the retail traders start to buy the stock again. And then in the end, when you reach higher zones, the investment funds and the hedge funds, and then even the pension funds start putting their money in a stock. You can read the lines, you can predict the behavior of people, but that's only the beginning, because when is a stock price rejected, when it's accepted? There is a lot of technique behind that, and we are explaining you the basic principles and of course not the golden ratio rules, because those are us. But we can show you the results on which you can act. And that's the observer demo. For example, with the Heijmans case, we are telling you to hold the position or to reduce it or to expand it or to sell it, because our software is calculating that the thesis is under pressure, for example. So it's better not to add, but if you have a position, it's good to hold it, to observe it. And we know because the macro support is still intact. So the macro vision, in macro vision, Heijmans is still in bullish. At this moment, the stock price is testing the lower support zones. But as long as important lines are not broken, like here the hard thesis invalidation, as long as we stay above 81, we are not expecting that the price will break to lower regions. That's why we say the macro support is still intact, but the thesis is under pressure because the price is testing lower support lines. But if you have a position, hold it. The dashboard has even much more information, but basically this is how it works, this is how we think, and this is how we use Fibonacci and the Dunning-Kruger effect to calculate what the stock price most probably is going to do in which region. Find all information on the membership page. Here we are explaining everything, how it's working, what you may expect from us, and which names are fully calibrated in our software. What are these option contracts? What are they? How does it work and how to work with it? We made an option contract beginner guide and we've uploaded it in our resources library on our website. You can download it for free. In this document, we are explaining from A to Z what it is and how to work with it. But we will explain it here in this video also. What is an option? Actually, it's a contract and you buy the right to buy or to sell the underlying value. One option represents 100 stocks, but you can choose to just buy and sell the contract and not the actual underlying 100 stocks. How does it work? For example, here we see the Heijmans stock chart again. Heijmans is at this moment on 92 euros. And it came from 115 euros. It's within the Fibonacci sequence, as you can see from the upper red area. It's now in the lower lying yellow area. That is within the Dunning-Kruger effect and the Fibonacci chart as how we have created it. It's just below the 0.236 line and just above the 0.382 line. And our software is calculating how the human behavior is behaving within this region. Here you see an actual option chain of Heijmans. The underlying stock is Heijmans, as we know. And the strike price, for example, here, 90. And the expiration here in this case is June 18th, 2027. So in 370 days, it expires. And the premium we see here and the multiplier we know it's 100. And so how does it work? So at this moment the stock price of Heijmans is 92. So do we think that within 370 days the price is above or below 92? Of course, this is the gamble. This is how stock and option trading is working. But within the thesis we are still bullish. And within the outlook and within the market opinions and within the fact that at this moment it's a holiday season period, so it's low transactions, and in these times the price is always dropping a little bit, we can assume that the price will be above 92 within 1 year, because basically this is almost 1 year. Will the price before or at June 18th will be higher than, well, let's say 85 euros. We can see here a master support level is 87. So we do not think that this support line will be broken because the outlook of Heijmans is so very well. So in this case, we would dare to buy an option of June 18th, 2027, 80 or 85. So what does it cost? As you can see here, this is sort of a marketplace. So people are offering 1730 euros and people are asking 1835. So the sellers are putting this option for sale for 1835, but potential buyers are asking it for 1730 euros. So you can choose your own price. We always are going to sit in the middle of it. So I would put an order in the market for, let's say, 1780 or 1800 euros. So let's say if you buy this contract for 1800 euros, you have actually bought the underlying 100 stocks for just 1800 euros, and you have a contract with which you are speculating on that the price will be above 85 euros before or ultimately at June 18th, 2027. And then this is where it becomes interesting, because what will happen with your contract if the price rises? Well, so in the coming months, and let's say September, October, November, when the market is active again, and you are hoping on good news, let's say Heijmans has won another tender again, and the price moves up to 105 euros. Then there is a lot of expectation value in your contract. So your contract may be worth 2,500 or even 3,000 euros. And then you can sell this contract on the market. That is where you make your profit. In this document we made an example, and I will use this one. So we're going to make it visible for you. So you sell the contract for 3,000 euros, but you bought it for 1,800 euros. The profit in between is 1,200 euros, because you have to pay the 1,800 euros for the contract, but if you sell it for 3,000, that's what you actually receive. And this is of course the income for the seller. So this is where the seller is speculating on. Of course, the seller is hoping that the price will be below 85, because then the seller will earn much more money. But you, in this case, earned 1,200 euros. And you didn't have to buy the shares for 85 each, because then it would have cost you 8,500. But you only had to spend 1,800 for the contract with which you are speculating on 100 shares. If you are interested in a membership, go to the membership section on our website and you can find all the information there. CSE-capital.com. We would love to see you there, and thank you for watching. Bye.